So what is the market hoping to hear from the trade meetings at the end of the week? We're joined by David Lebovitz. He's the Global Market Strategist at JP Asset Management. David, welcome back. Nice to see you again.
Thanks for having me.
What does the market anticipate or want to hear at this juncture?
So I think that the market is operating under an assumption that eventually, at some point, we do get some sort of deal. I think in terms of what the market wants to see with respect to this week and the next couple of months is the tariffs that are on the cusp of going into effect, seeing that can get kicked, seeing no escalation in trade tensions beyond where things currently stand. I don't think the market is expecting this to go away, but I think kind of maintaining that 2 steps forward, 1 step back type of narrative that we've seen in play for the past almost 18 months is kind of what the market is currently pricing in.
There was a survey released today, David, of the economists that make up the National Association of Business Economics, and a majority of them said they feel like the U.S. could dip into recession next year, largely because of the tariff situation, the trade war. So our question is, what would keep us out of recession? Prioritize some of the issues that they are going to be negotiating this week. I mean, is it something to do with the consumer? Is it manufacturing is already in recession at this point? Is there something they could do to pull that out at this point? What do you think?
I think manufacturing is in a bit of a tough spot. And what happens with manufacturing activity, not just in the U.S., but around the world going forward, is going to be beholden to how trade talks develop. In terms of our view on where the U.S. economy is headed, it really all comes down to the consumer. Manufacturing goes through mini cycles every 18 to 24 months. We've seen a couple of them over the course of this expansion. The consumer has been able to offset that weakness during prior episodes. The consumer is actively offsetting that weakness during the current episode. But the question that you need to ask yourself is, we look at last week's jobs report, we see the pace of job growth slowing down. The consumer isn't headed off of a cliff, but consumption is obviously a function of what goes on in the labor market, and you're seeing companies begin to pull back a little bit. And so that's something that we need to keep an eye on as we gauge the longevity of this expansion.
And very quickly, if these new tariffs do go in, they are going to hit a lot of consumer electronic products.
Yes.
Which could, I would assume, have a dampening effect.
Absolutely. And I think that's why this final round of tariffs is so scary. Mm-hmm. Up until this point, people don't buy washing machines every year for the most part, but they do buy phones every year. And so we need to think about, what is in this set, and it's definitely more relevant to the way that the consumer spends their money.
David, thank you so much, as always.
Thanks for having me.
David Lebovitz with JP Asset Management.